Now come to the next in adjustment entries. Here we see how the journal entry is passed of the different type of adjustment. So I am giving you one question, you see the question, and thereafter we pass the journal entries. So the question is, give journal entries of the following adjustment entries. Give journal entries for the following adjustment in the final account, means financial statement. So the first one is provision for discount on debtors. Next is closing stock. Next is outstanding expenses, prepaid expenses, accrued income, income received in advance, provision for doubtful debts, and depreciation. So come one by one. Provision for discount on debtors. What entry we will pass at the time of preparing financial statement if these are given in the adjustment? So the first is provision for discount on debtors. You know, the provision for discount on debtors is transferred to profit and loss account. So profit and loss account debit, profit and loss account debit, okay, to provision for discount on debtors, provision for discount on debtors, provision for discount on debtors. Suppose amount is 5,000 or 4,000, you write the amount over here. I am giving you a imaginary amount, I am writing the imaginary amount. So provision for discount on debtors is transferred to PL account debit side. So you do the entry of the first, serial number 1, profit and loss account debit to provision for discount on debtors. The narration will be very simple. Being provision made, being provision made, being provision made for discount, made for discount on debtors, being provision made for discount on debtors. This is the first transactions of the adjustment, provision for discount on debtors. Next is closing stock. Next adjustment is closing stock. If closing stock is given in the adjustment, then closing stock is transferred to trading account. So the entry will be closing stock account debit. Second will be the closing stock account debit, closing stock account debit, okay, closing stock account debit to trading account, to trading account. This is transferred to trading account credit side. Yes, being closing stock, being closing stock, closing stock bought in the books, bought, brought in the books, brought in the books. Suppose closing stock is 59,000 is the closing stock, then you write 59,000. I have written over here the imaginary figure. This figure is not given in the question. I have just written the imaginary figure. Closing stock account debit to trading account, being closing stock brought in the books, because it is given in the adjustment. Next adjustment is outstanding expenses. If any expenses is outstanding, so expenses account debit, that particular expense will be debited. Expenses account debit, that particular expenses. Suppose wages, then wages account debit, salary, then salary account debit. So that particular expense account debit to outstanding expenses, to outstanding expenses, outstanding expenses, okay, outstanding expenses. Narration will be very simple, being adjustment entry pass, being adjustment entry past, adjustment entry past for outstanding expenses, outstanding expenses, outstanding expenses. This will be the narration. This will be the narration. I am going to write the imaginary figure. Suppose 2000 is the outstanding expense, then you write 2000. Okay. Next one is, next adjustment is prepaid expenses. Prepaid expenses paid in advance. If this is given in the adjustment, then prepaid expense will be debit. Prepaid expense will be debit. Prepaid expense, it's an assets. Prepaid expense is the asset. So prepaid expense account debit. Expenses paid in advance. So prepaid expense account debit to that particular expense account will be credited. So expenses account will be credited. Prepaid expense account debit to expense account. Suppose prepaid salary, then prepaid salary account debit to salary account. Prepaid wages, then prepaid wages to wages. Prepaid rent, then prepaid rent account debit to rent account. Narration will be being adjustment entry past, being adjustment entry past, being adjustment entry past, being adjustment entry past for prepaid expenses, prepaid expenses, prepaid expenses, being adjustment entry past for prepaid expenses. Suppose prepaid expenses is 5,000, so you write 5,000 in the debit and 5,000 in the credit. Okay. Now coming to the next adjustment entry, accrued income. Accrued income means income earned but not yet received. Income earned but not yet received. For accrued income is the asset. So accrued income account will be debit. Accrued income account will be debited. Accrued income will be debit and income account will be credited. Accrued income will be debit and that particular income account will be credited. That particular income account will be credited. Accrued income account debit to income account, being adjustment entry, being adjustment entry, adjustment entry, entry past, being adjustment entry past for accrued income, being adjustment entry passed for accrued income. Suppose accrued income is 1200, so then you write 1200. Is it clear? Being adjustment entry passed for accrued income. This will be the narration for accrued income. Is it clear? Now see the next adjustment entry. We have completed the fifth one, accrued income. Thereafter the sixth one is income received in advance. Means it is a unearned income. It's a unearned income. If income received in advance, then this transaction is transaction number 6. Okay. If income received in advance, then that particular income account will be debited. That particular income account will debit that particular income and credit the income received in advance. Income received in advance account will be credited. This income received in advance is also known as unearned income. So you may write unearned income over here or income received in advance. So narration will be very simple. Being adjustment entry pass for income received in advance. Okay, being adjustment entry passed for income received in advance. Suppose imaginary item as imaginary amount, I am going to write it 3500. Suppose the rent received in advance, then rent account debit to rent received in advance. Suppose commission received in advance, then commission account debit to commission received in advance. Okay, is it clear? Now next adjustment number 7 is what? It is related to provision for doubtful dates. We have discussed it earlier as well, provision for doubtful dates. So profit and loss account debit to provision for doubtful dates. It's a new provision for doubtful dates, provision for bad and doubtful dates. Provision for doubtful dates. You may write it provision for bad and doubtful dates. Provision for bad and doubtful dates. So narration will be being adjustment entry passed for being provision made for doubtful dates. Being provision made for doubtful dates. Being provision made for doubtful dates. Imaginary figure, suppose it is 700, then you write it 700. Next is 8 number adjustment which is given in the question is depreciation. It's very simple. Depreciation account debit to assets account. Depreciation account debit, it's an expense. So depreciation account debit and we will credit to that particular assets account. So assets account will be credited, that particular assets account will be credited by us, being depreciation charged, being depreciation charged, being depreciation charged on assets. Okay, being depreciation charged on assets. Suppose depreciation is 10,000, then you write it 10,000 over here. Suppose the depreciation is on machinery, then depreciation account debit to machinery account. Depreciation is on building, then depreciation account debit to building account. If depreciation is on furniture, then depreciation account debit to furniture account. If depreciation is on equipment, then depreciation account debit to office equipment account. Is it clear? So this way we record the transactions which are related to adjustment, which are not incorporated or recorded before the trial balance. Okay, all these things comes after preparation of the trial balance, but before the preparation of the financial statement. So while preparing the financial statement, we have to do these adjustment. For that we have to pass the adjustment entry, and we have to adjust accordingly in the financial statement, income statement and positional statement to know the true profit or loss of the business, or to know the true financial position of the business. Is it clear? Come to the next question based on adjustment entries. Based on adjustment entries. So the question is, give journal entries for the following adjustment in final account, charging CGST and SGST at the rate of 6%. You know, CGST at the rate of 6% and SGST at the rate of 6%. CGST and SGST at the rate of 6%. So give journal entries for the following transactions, for the following adjustment in final account, means in the financial statement, charging CGST and SGST at the rate of 6% each. So the first is closing stock. In closing stock, CGST and SGST is not taken into considerations because it is already been done earlier. So when it is related to closing stock, so closing stock account debit to closing stock account debit to trading account, to trading account, closing stock account debit to trading account. Being closing stock, narration will be very simple. Being closing stock, brought into the books, brought into books. Being closing stock brought into book. So information of closing stock is 80,000 is the closing stock. So write the 80,000 in debit and 80,000 in credit. Okay, closing stock account debit to trading account, being closing stock brought in the book, brought into the book. Next is outstanding rent. Rent is outstanding, and you know the CGST and SGST both is at the rate of 6%. So rent outstanding, rent account debit, rent account debit. How much rent is given in the question? Rent is 20,000 is the rent which is given. Input CGST account debit. Input SGST account debit. Input SGST, state GST. Input central GST, input state GST account debit. That will be debit by 6%. 6% of this amount. So 6% of 20,000 is 1200. 6% of which amount? 6% of 20,000. 6% of 20,000. So it is 1200. Is it clear? So CGST and SGST both is at the rate of 6%. To outstanding rent. To outstanding rent. You add it, so it is 22,400. 22,400 being outstanding rent adjusted. Being outstanding rent adjusted. Being outstanding rent adjusted or adjustment entry passed for outstanding rent. You can also write adjustment entry passed for outstanding rent. Okay. Next one is insurance premium amounting to rupees 15,000 is paid in advance. We pay the insurance premium in advance. When we record these transactions, adjustment entry in the books, we are not going to pass the entry for CGST and SGST, because when we paid this amount earlier, on that time we have already done the entry of CGST and SGST. Already we have done it. So at the time of adjustment, we are not going to pass the entry for central GST and state GST. So in case of prepaid expenses, CGST and SGST is not recorded in adjustment entry. So third number is very simple. Third number is insurance premium paid in advance. So insurance, prepaid insurance premium account debit. Prepaid insurance premium account debit to insurance premium account. Here we are not going to record the CGST and SGST, because in case of prepaid, when we have paid it, on that time CGST and SGST is debited. So we are not going to record this one at the time of adjusting entry. So the amount is 15,000. Amount of insurance premium paid in advance is 15,000. Being insurance premium, being prepaid insurance premium, prepaid insurance premium accounted in the books or recorded in the books. Accounted in the books or recorded in the books. Next is fourth number. Next transaction is 9,000 received for rent related to the next period. 9,000 rent received 9,000 received for rent related to the next period. Okay, so it is related to the next period, means unearned rent. We are talking about unearned rent. In unearned rent as well, we are not going to record the CGST and SGST in adjustment, because when we have received that income, on that time output CGST and output SGST is credited. When we have received that income, on that time output CGST and output SGST is credited. So at the time of adjustment of unearned income, unearned, then that will not be, CGST and SGST is not going to record. So rent received account debit, rent received account debit, we have to do the rent received account debit, because we have credited with the more amount. That's why the rent received will be debit and credit. Rent received in advance, rent received in advance, rent received in advance. This is also known as unearned rent. Unearned rent. So the narration will be being rent received in advance, being rent received in advance, being rent received in advance, accounted in the books, accounted in the books, or recorded, accounted in the books, or you can say recorded. Rent received in advance is also known as unearned rent. So you may open the account unearned rent as well. Rent received account debit to unearned rent, or rent received in advance. Amount is given over here 9,000. 9,000. Okay. So in case of prepaid expenses and income received in advance, unearned income, in both cases CGST and SGST is not recorded in the adjustment entry. Okay, this should be very clear. Okay, coming to the next adjustment number 5, commission accrued but not received during the accounting year. Commission accrued but not received. This is called accrued commission. Commission earned but not received. So when the commission, this is the point number 5, transaction number 5, accrued commission account debit, accrued commission account debit, accrued commission account debit, okay, to commission account, and here we have to do the entry for CGST and SGST. Output CGST account to output SGST account, output SGST account, output SGST account. Okay, so commission is how much? Commission is 5,000 is the commission. First I am going to write the amount of commission, that is 5,000, and 6% of 5,000 is 300, 6% of this amount, and again 6% of 5,000 is 300, total is 5,600. In accrued commission, the amount will be debited by 5,600. being accrued commission, accounted for, accounted in the books, being accrued commission accounted in the books. Is it clear? So when the commission earned but not received, that is called accrued commission. On that time we will do the entry for CGST and SGST. As it is an income, so output CGST we will receive the GST. So output CGST and output SGST will be credited. Next is related to bad debts. Write off 500 as further bad debts. Further bad debts means additional bad debts. Sixth number adjustment is for further bad debts, means additional bad debts in addition to the bad debts which is given in the trial balance. For that the bad debts account debit, bad debts account debit to sundry debtors account, being additional bad debts written off, being additional bad debts written off. Is it clear? Being additional bad debts written off. Come to the next. Goods costing rupees 8,000 destroyed by fire, and insurance company admitted a claim of rupees 5,000 only. So goods costing rupees 8,000 destroyed by fire. We'll do the entry first. Goods costing rupees 8,000 destroyed by fire. This is related to 6. Goods destroyed by fire is how much? Goods destroyed by fire is 8,000. So loss by fire account debit, loss by fire account debit to purchase account. Goods is lost by fire, so purchase account will be credited. Purchase account will be credited by 8,000. Okay, and input CGST and input SGST will be cancelled accordingly. SGST will be reversed. So input CGST and input SGST will be reversed. The rate is what? Rate is 6%. So 6% of 8,000 is 480 and 480 respectively. 6%, 480. Total will be debited to loss by fire 0698, 8,960. 8,960. Is it clear? Being goods destroyed by fire, being goods destroyed or lost by fire, being goods destroyed by fire or lost by fire. And one more entry, as the insurance company has admitted the claim only up to 5,000. So insurance claim account debit, insurance claim account debit, insurance claim is only 5,000. So the rest will be the transfer to profit and loss account. Rest will be transferred to where? Transferred to profit and loss account. Profit and loss account to loss by fire. To loss by fire account. To loss by fire. So loss by fire is 8,960 and insurance company admitted the claim up to rupees 5,000 only. So difference is 3,960 is the loss by fire. This is the difference amount. Okay, this amount is the difference amount. Being claim accepted by the insurance company. Being claim accepted by insurance company and balance transfer to profit and loss account and balance transfer to profit and loss account. Is it clear? Balance transfer to profit and loss account. So the two entry will be done in adjustment number 7. First, for loss by fire account debit to purchase account to input CGST, it's a reverse entry, reverse of the input CGST. Earlier it was debited to input SGST, and the next entry, as the insurance company has admitted the claim only 5,000, so rest is transferred to profit and loss account debit side. It's a actual loss, and the insurance company account will be reflected in the balance sheet asset side. Okay, balance sheet asset side. Now come to the next adjustment. In the same question, next adjustment number 8. Adjustment number 8 in the same question. Adjustment is goods costing rupees 10,000. Within the bracket it has given market value 11,000 were taken by proprietor for personal use. So you know that this entry will be recorded at cost or market price, whichever is less. So goods costing 10,000 and market price is 11,000. So cost is less than the market price, then this transaction will be recorded at cost. Okay. So goods costing rupees 10,000 were taken by the proprietor for personal use. So drawings account debit. It is what? Drawings account debit. Drawings account debit to purchase account, because goods is taken by the proprietor for personal use, to purchase account, to purchase account, to input CGST account, to input SGST account. The reversal entry will be passed for input CGST and input SGST. Okay. So the purchase amount is 10,000. CGST and SGST is at the rate of 6%. So 6% of 10,000 is 600 and 600 Total is 11,200. After adding these three, it is 11,200. Okay. So the narration will be being goods taken by proprietor, being goods withdrawn by proprietor, being goods withdrawn by proprietor, being goods withdrawn by proprietor for personal use, proprietor for personal use. Now adjusted, okay. So drawing account debit to purchase account, to input CGST, to input SGST. This is reversal entries passed for input CGST and input SGST. So is it clear? These are the adjustment entry we have to pass while preparing the financial statement. Okay, so that we know the true profit or loss of the business and true financial position of the business. Okay.